Welcome to Modern Farm Business Podcast. This podcast is designed to help the farm leader bring their business to the next level. We'll cover everything from leadership and finance to strategy and planning. I'm your host, Dean Hefta. The one thing traders of any market can agree on is emotions are real. We like to think of ourselves as logical, calm, and rational people. But when we move into the world of any market, whether it's trading baseball cards, wheat, or antique lamps, emotions can often take over. Today, we're talking about the emotional reality of trading and some principles that can help us to manage ourselves better. The first element that is important to understand, especially when we think about the world of stocks on the Dow Jones, crude oil in New York, or corn in Chicago, the market is an auction. We know when we go to an antique tractor auction that it's an auction because we have an auctioneer and the participants there have numbers. But what can often get lost in the shuffle is the fact that every day soybeans are traded, it's happening on an auction. The purpose of any auction is twofold. First, to provide an environment where buyers and sellers can come together, and secondarily, to provide price discovery for the product. So, a farmer retires. You go to the auction. In this situation, you have one seller. And the more people that show up, the more potential buyers you have. Every buyer has a number and the ability to bid on what they're willing to pay. The auctioneer is facilitating the discovery of price of each good. Really, the auctioneer is operating as an agent on behalf of the seller. They're trying to get as much out of each item as possible. Good auctioneers, they get lots of people to show up, and they do a good job during the auction of getting people to bid. This is an important analogy to be able to apply to the world of commodity and equity trading. If you've ever been the person at the auction to pay way too much for something, you know that emotions can get the best of you in the moment. The fact is that over time, auctions are the most effective and most efficient ways to discover the value of something. That being said, in the short term, auctions can be overrun by emotion. You may see something selling way too cheap, and that's simply telling us that there's a lack of buyers or maybe way too many sellers. The flip side is when you see somebody paying way more on the auction for, let's say, a welder, than they could go down to the store and buy a brand new one for. Again, auctions are the best price discovery tool over time, but the emotion can get them out of whack in the short term. So, recognize that the market is made up of emotion of the people participating in it. When we're feeling emotional, we often don't make the best decisions. The same thing goes for any market when there's something emotionally going on in the world. Maybe that's 9/11 or the Panic of 2008 or whatever else may drive the emotions of the participants. Since the market is made up of the emotions of the participants, we have to be self-aware of the emotions we are dealing with so we can better respond. Today, we're covering 4 of the emotions that we might encounter when it comes to pricing the goods from our farm. The first one is regret. You know, one of the most paralyzing emotions there is that of regret. The price of the commodity gets to a level that isn't quite what we were hoping for, and then suddenly it falls. At that moment, we now know what we could have had for the commodity if we had acted, but we didn't. Now suddenly our brain shifts into what we think the product should be worth, or what we would now be willing to accept if it got back to the price. But the reality is the commodity is always worth what it's trading for today. At this moment, can we set aside our regret, which I would consider the act of applying new information to an old situation? Can we set aside our regret and act? The best antidote to this is incorporating a plan for what will I do when the price starts falling? When we can script our future actions, simply saying, what are we going to do when something happens, which in this case includes how much we're going to sell, where we're going to sell it to, how we're going to sell it. The more clear we can get on those elements, the more likely we're going to be able to take action quickly. And that's the key to managing regret, is knowing what we're going to do and being ready to take action soon. The second emotion is greed. Greed in the world of commodities I see play out as this perpetual price dissatisfaction. If corn is $3.60, I want $3.80. Once corn gets to $3.80, now I will accept $4. It's a failure pattern of saying to ourselves that until I get a higher price, I won't be happy. Failure is that for many of us, it never gets high enough for us to be really satisfied. We end up kicking the can down the road until we've run out of time on the calendar, and now we have to act. How can we counteract this greed? Well, different things work for different people, but one way is maybe for you to make smaller decisions and do it more frequently. So it could be that in my greed, I want a certain price for my whole crop, and I'm afraid that if I take less, the price is going to go higher later. So let's make smaller decisions sooner. Another tool could be using targets. If I have a good handle on either my projected profitability or once harvest comes around, my actual profitability, I can reduce my greed factor by using targets and placing orders at the elevator or in my account. It takes out the risk of wanting to wait until tomorrow to see how price acts and see if we can get just a little bit more. The third one is fear. Fear is real and a significant motivator for people. There's a concept that has grown with social media and contributed to a lot of people's anxiety. It's called FOMO, or fear of missing out. Fear in marketing manifests itself in many different ways. Fear that the price is going to collapse further, so I end up selling out on the lows. Fear that I'm not going to grow a crop, so I don't sell anything ahead. Fear that if I sell, price is going to rally later, so I freeze. Fear that price can never rally, so I end up selling everything on the first 10 cents I get. The key to managing fear is a few things. First and foremost, it's knowing yourself. Fear is a good thing, and it's a survival mechanism. But taken too far, it can really keep us from being able to thrive. So the question is my fear leading me to manage risk positively and appropriately? Or would my history include a track record of actions that are really driven by fear that ended up being poor decisions? With that self-awareness, I can begin to build a plan that's right for me to manage that fear and hopefully avoid those situations where I've made poor fear-based decisions. Here's the fourth one, envy. This is one that doesn't get talked about a lot, but it's real. We stop at the coffee shop and someone's talking about how they sold the high in the market. We read an expert in the magazine talking about what other people did a few months ago. We hear our neighbor talk about how high one of their fields yielded. Here's the problem with all of these scenarios. None of them share all of the information you need. The guy in the coffee shop sold 1% of his crop on the high, and at the end of the year, ended up getting worse for his price than you did. The expert in the magazine has the luxury of being able to pick stories from the past that look good. And the neighbor with the big yield isn't talking about his break-even levels or profitability per bushel. We're feeling envious of the actions or the lives of others. But I can assure you that much of what is presented to the world is far from the whole story. So what can we do? Well, first and foremost, tend to your own garden first. The farmers who focus on the basics, doing everything you can to lower your cost per bushel, sets you up to compete in the long run. This gets you focusing on a different scorecard, one that fits your game. If I go to the gym and I see a guy bench pressing 400 pounds, I'm not envious. We're playing a different game. Focus on good financials and having a fanatical approach to building your ability to improve your cost per bushel. That doesn't mean you shouldn't try to learn from these others. You can ask the guy at the coffee shop what led him to price those bushels. Maybe there's some insight you can glean there. The neighbor with the big yield, maybe he has a production practice that you can learn from. But stopping at envy will end up being a roadblock to our progress. Regret, greed, fear, and envy are just a few of the emotions that we might feel when it comes to the market. And, markets do involve risk, and marketing isn't for everyone. But by being aware that these emotions are natural for any of us to experience, and that there are strategies that we can employ to better manage them, we can grow our abilities as farm leaders. At Water Street Solutions, we understand emotion in marketing is real and work with clients to grow their understanding and build plans that fit their needs. To learn more about approaches for your operation, contact Water Street at 866-249-2528 or go to waterstreetconsulting.com. I hope there's some insights from today that you can employ in your market management strategy. Thanks again for joining me on this episode of Modern Farm Business Podcast.